The ATX DAO Podcast is brought to you by our friends at Tequila 512. Looking for a way to decentralize your happy hour? They got you covered. Welcome to the ATX DAO Podcast, the hub for exploring the forefront of blockchain technology in Austin's Web3 community. We connect you with innovators within ATX DAO and beyond as we venture into the world of decentralized technology. So crack open a beer and join us for a front row seat to learn about the innovations and trends shaping our digital future. This is the ATX DAO Podcast.
I'm so stoked to have you on here. I think it's official. Mike is our first capital allocator on the pod.
Is that right?
Yeah.
Okay.
You're the very first.
It's a builder
man.
pod, huh?
Yeah.
You should be talking to builders anyways. The builders do it all. You guys do it all. We just support when we can. And, it's, I don't know. We'll get into it. But I appreciate being here. Thanks for having me. And that's crazy that I'm the first VC or capital allocator on.
And we've said no to a bunch of people. And
Yeah, I think when I booked this, it was like a month and a half or 2 months out. That's awesome.
yeah, it's kind of crazy. That's the reason why we got the intern. So Kamish, you're doing the Lord's work here. But yeah, man, we're stoked to have you on. And it's also, I was telling Luke a little bit about you about also from our call, and I didn't tell him how we actually bumped into each other, but he ran a very successful syndicate with Deep Ventures, and now you guys are expanding and growing into the fund. And yeah, man, I would
Graduating,
so
to speak.
And so that's why I feel like I'm not talking to a proper, what I mean, a VC, VCs, as founders, and you kind of get this too. My experience has been you talk to many VC firms and it's always they're great at allocating capital, but they're a bunch of idiots, right? So talking to a founder first kind of allocator is great because from a syndicate perspective, right? Because it's they're builders that are backing other builders. They're capital allocators that were in the builder position or in the capital allocator position or transitioning to it. So it's rare. So I'm excited that you're the first one, to be honest.
So yeah, I mean that's kind of I think that there's a big difference there, and I'm not going to say that all VCs are this way, but the VCs who were founders in the past, which I was, and my partner Sherman is, there's that level of kind of empathy that they understand what the founders are going through and how hard it is, and I think it's kind of the people that just come out of business school or whatever, or had rich families or whatever, that spun up a fund like that, that kind of don't really know what it is to be in the founder trenches, so to speak. Not saying that they can't be good VCs. It's just that there's this kind of connection between ex-founders who are VCs and just really understanding the journey. That's all.
Yeah, so much of that going through my experience in crypto and being a founder also in Web 2 and then coming into Web 3 is very much you want that network effect where it's bro, I'm kind of you're isolated. It's you're just eating glass and staring to the abyss, right? To take Elon quote. And it's always good to have investors that are on your side. And it's not just about the money. It's about what do you think about this idea? Hey, do you think that, and then bouncing stuff off them and also getting the network effects of hey, there's this other founder you should probably talk to about this. And it's it's rare to find VCs that kind of make that connection. So it's really special. And I keep telling Luke, I'm bro, when you do the founder journey, you're going to see all these things to be super valuable, and it's going to be fucking amazing.
Awesome.
So yeah.
And just so I was a Web 2 founder and a Web 3 operator, not a founder, but early stage project. And dude, being a Web 3 founder is Web 2 founder was hard enough. Being a Web 3 founder is so fucking hard. It is ridiculously hard. Not only do you have to worry about, the product, right? But you got to worry about, building the community. That's way different than in Web 2. When you launch a token, it's a whole different ball game. Up until then in the US, up until now, you kind of had to very much worry about the regulations. You still do, but certainly there's been a loosening there, and you just got to think about so many different things. And it's 24/7. People all over the world, it's brutal. So I I praise everyone who just even thinks about being a Web3 founder, let alone actually doing it.
Welcome to madness.
Right.
For those of you who are just tuning in and just like basically, we don't do a video element to the pod, right? I've put my left hand on Luke's shoulder and I'm like, bro, it's going to be great. Just jump right in.
Yes.
The water's exceptionally frosty cold and there's leopard seals and killer whales everywhere.
Yeah. Love it.
So,
you guys don't do, this isn't video?
No video. No,
you just do the pod?
Yeah, we
Oh,
just
that'd
do
be
the
awesome,
pod.
man.
Yeah, so like the lighting. Also, I just want to make a note for all our audio listeners. Mike's skin is absolutely glistening. It is glowing. I don't know what he's doing. Whatever his diet regimen is, if he's on the blueprint plan with
I'm on the
Brian
the
Johnson,
Brian Johnson. Yeah.
I'm like, bro, it's paying off. You know, you told me how old you were before. You know, when you started. I'm like, bro, you do not look like that number at all. Like,
put on the powder and the makeup and all that kind of stuff. It's too bad.
Yeah, so listeners, you definitely are missing out. We apologize for not having video on the pod anymore. We'll load a picture.
Did have it.
We
you
did
have it at one point.
Yeah, season 1 we had video. We're just finding that some folks didn't want to be on camera, and a lot of times the guest will be like in a hotel room or something like that as well. So it was just kind of a little better for a lot of folks. Plus, when we do like in-person ones, which we try to do more, just getting like 4 different cameras on all the guests and stuff is a little bit tough. So we ended up shifting over. We'll see. Maybe eventually we'll bring video back to the show.
Yeah, when you come down to Austin, we'll do the video element for you.
All right, sounds good.
So
good.
yeah,
there's a chance that I'm not going to look as good as I do right now. But
if there's anyone who has reverse Benjamin Button's disease, it's Mike. So he's probably gonna be like, dude, you look like a 25-year-old now. Right. Like, what the fuck is going on?
Like the Paul Rudd thing going.
Yeah, exactly. He's like, he never ages. Basically a vampire.
That's funny.
No, but like, dude, like you mentioned a little bit. So like, as you can tell, kind of from the pod, we kind of just have a free-flowing conversation, and it's meant to be like we're just chilling and just having a talk with you. So we would love to hear about you, man. Like, how did you come to the point of, championing deep ventures? Like, where did you come from? Like, what was the journey like? Tell me about the Web 2 glass eating effect, all that stuff, like you take it.
Yeah. Man, I've had about, 18, 19 careers. It's been a bit insane. I was an engineer by education, which, I did material science undergrad and then went straight. So it's like all like the deep tech stuff and all the material shit now. It's like that stuff is super cool. I never did that for 1 minute in my real career, but it was a fun, interesting degree to have. And then I went into more like business engineering, industrial engineering. I did some consulting, very boring. That was out in the West Coast in San Francisco with it was like, I didn't even know what tech was back then. It was after like the tech crash in like 2000. And did some consulting, and then I got very bored with that. And I hit like this quarter life crisis. I was like, what am I going to do with my life? I knew I was going to go back to business school. So I came back to New York to do business school. And I transitioned to a career in sports business. So it was always like a kind of a dream when I was a kid to be like a GM of a sports team, like many, many males. And I actually have a long story about like how I actually screwed that up. I actually may have had a chance to do that.
Oh, wow.
And I screwed it up. I can go into that, but we don't need to go in there right now.
No way. We'd love that too.
Okay.
The big element also in this is like understanding mistakes that we have. Like you want to publicly own your mistakes because that's where you grow.
Yeah.
Right?
Yeah. All right. You want to hear the story?
Yeah. Tell me.
All right. So I'm transitioning to the sports industry, which is like, I found it was like overall, there's a lot of money in it, like media and all that, but like the network is pretty small, right? There's athletes and all that, but like the people who work in the sports industry, that network is pretty small. And I was transitioning to a new industry. I was looking for an internship after my first year of business school. And I was interviewing with Major League Baseball, their labor relations department. Okay. And I didn't even know really what that was. And then I was also interviewing with like some other like sports marketing firms, just, getting my foot in the door. And, MLB is a big organization. And I talked to these guys and they were great. They were like, Mike, we really like you. It's in HR's hands right now. I was like, okay. Kept following up. I got an offer from another sports agency and they're like, hey, can you give us a decision by the end of the week? I was like, okay, sure. So I go back to Major League Baseball. I was like, hey, how are you guys doing on the decision? They're just like, it's in HR's hands. We can't really do anything right now, but we really like you. So the time came where I had to make the decision, and I had no other opportunities. I had to take the agency job. And then like 3 days later, Major League Baseball comes back to me and says, oh, we want to offer you the gig. And I'm like, I don't want to burn any bridges, right? In this industry, small industry that I just trying to get into, right? So I'm like, oh, like, I'm so sorry. Like, I would love to stay in touch. And they're like, oh yeah, no problem. You know, it was on us. We took too long. So the two guys that I would have worked for at the Major League Baseball, one became the like assistant general manager of the St. Louis Cardinals. And then he became like president of like the New Jersey Nets and all that kind of stuff, more on the business side. The other guy who I would have worked directly for, he was like the younger guy. He became the GM of the Philadelphia Phillies and signed Bryce Harper to his $300 million deal. So like, I'm not saying that would have been me, but that is the path they took to those positions. That was like my childhood dream. And I was like, on the doorstep or on the lawn or whatever you want to say, not quite there yet, but like, that was the path. So like, I don't have many regrets in life, but that is one that kind of eats at me just a little bit.
That is crazy.
Like, don't get me wrong. I love crypto. I love VC. But like, if I'm making, signing people to hundreds of millions of dollars of contracts, and that could have been pretty fun too, right?
That is crazy, bro. Talk about, well, I guess in a way, it kind of like really informs your VC stuff, right? It explains FOMO and all this stuff as well. It's kind of like, it's kind of like betting on moonshots in that way. Because that would have been a crazy moonshot. Like if you asked your 19-year-old self, like, do you think this is ever going to happen? And like at 25, you're getting this opportunity. You'd have been like, no, probably never, ever. But like, this is the crazy path less traveled. The moonshots and the bets on it, I guess, is now a direct relation to how you apply and allocate capital.
Yeah. I mean, dude, I could, be grinding it out in like Kansas City right now. You never know, right? But like, still, you never know. That's kind of the thing. Like, you never know what could happen, right? So yeah, that's one of the, I think about that every now and then. Anyway, moving on.
Do you watch? Well, I gotta ask. Do you still watch? Do you watch baseball or no?
I still do. I'm a Yankees fan. From New York and New Jersey, so I still watch baseball. When Bryce Harper signed that deal, not that I watch the Phillies that often, but I was like, oh, I can't really.
You're like, the Phillies are burnt. I'm never watching the Phillies play again.
Yeah. Is wild. That's pretty wild. Anyway, I wound up getting a job for the Washington Capitals, the DC's pro hockey team. And it wasn't in like the scouting department or the hockey ops department, but it was on the business side. But I really enjoyed that job. Worked for a great organization, and that was where I played with a lot of tech. This was like 2007 to 2012. Like iPhone apps, Android apps, iPad apps, social media was just getting big right around. And I was playing around with all that stuff, building products, building those apps. And then, that kind of ran its course, and I left to start my own companies because I wanted to build the technology. Build like back then, like local social mobile was hot. So I built around that. Didn't quite take those companies as far as I would have liked. But, learned a lot. Learned about being a founder, product market fit, all that. But in 2013, I was taking like a coding course, and it was taught by Balaji Srinivasan. So yeah, this is 2013, like Coursera, like Stanford coding course. And he was teaching us how to build a like simple web wallet. And as part of that, we had to go to Coinbase to buy a little bit of Bitcoin to send to our web wallet. Maybe another regret. This was 2013. Bitcoin was at $94.
Oh, wow. That's crazy.
I wish I smashed the buy button a little harder. But, that's wish I bought more story that many people have. But So then at that point, I didn't jump right in because I was still busy with the startup stuff. But it was right around 2016 was when I started going down the rabbit hole and started kind of. I was a poor entrepreneur, so I couldn't invest that much, but like so started putting a little more, DCAing a little bit more. Then 2018, I just realized I was like, this is going to be too big. This is going to be too impactful. I jumped in, started leading marketing teams in crypto. Just really learning the ropes, just seeing how different it is from being a Web2 founder or marketing in Web2. Along that path, met my partner Sherman at Deep Ventures. He had spun up the Deep Venture Syndicate in about 2020, 2021, bull market things. I just kind of just said, hey, I want to learn about that side of the table. Jumped on a little bit later, started running the syndicate full time for about the last 2 years. And then, just recently spun up the fund and we'll see where we can take it.
That is crazy. That is a hell of a backstory.
How many careers were in there? It's like way too many.
Yeah, it's also crazy to see, for some people who might not know, Balaji is early Coinbase and also Network State. Mm-hmm. And the crazy thing is 2 people from the DAO just are moving to Singapore now for the Network State camp.
Oh, wow.
Yeah.
That's awesome. I didn't know that.
So Willie and Jesse are part of, so they're part of the DAO. Shout out to Willie and Jesse.
That's awesome.
Yeah, the rest of the team is going out to Singapore now, and Willie's already there. I saw a little Twitter post of him happily smiling in the Singapore sunshine. And of course he has his laptop out. He's working. He's a consummate workaholic, but loves enjoying it. It's like, and yeah, it's like crazy. So Balaji is like huge. That and the sports stuff is insane, dude.
It's crazy.
That's wild.
It's been fun. It's been fun. It's been pretty wild. Yeah.
Yeah. Also, starting up the fund at the peak of the market, I bet you must have seen a lot of different startups at various different phases and growth vectors, and also talked to a lot of interesting founders going into that bear market that came up. And now we're kind of in this quasi bull. I bet you have a crazy bunch of stories there.
So just to clarify, I was not part of the syndicate when it got started, right in the bull market. I started actually doing deals or looking at deals at the end of 22 and throughout 23, which was the deep bear, right? But it was pretty funny how I'm not, this is just the sign of the times where, we got some deals through in 23, some good deals through, but it was tough because, with the syndicate model, you're pitching deal by deal to the group of investors, right? So we don't have full autonomy of what deals we want to get in and how much. We essentially pitch them to a group of investors and they say how much they want to allocate, and then we aggregate all that money. But it's like looking at kind of the deal memos that I wrote in the bear market, I'm like, right, deep research, market research, 4 or 5 page analyses of, the market and the founders and how, where I see the future. And kind of looking at some of the deal memos of the bull was like, we like the team, send money. It was like, but that's just a sign of the times, man. It was just look, money was flying around back then like crazy. And that was when, DeFi summer, all that stuff happened. And it was just it was just insane. The ZERP there, money was cheap. It was just going around. And I know we're kind of paying for it now. A lot of VCs are, they just got into with the syndicate structure is a little bit different because we return, we distribute the tokens to our LPs upon that. So we didn't really get exposed to the huge dumps that a lot of the funds that manage the liquid tokens do after they unlock and everything. So we kind of got out on some great deals in a good spot, but it's just so different. Just ever since 2023 to now, there were some decent times in there where the market looked like it was a little bit frothy, but overall it's been pretty bumpy. And now, like you said, we're kind of in this kind of pseudo bull market, but still there's so much uncertainty out there. And all that money that's still locked up in a lot of the deals from 2020, 2021 are, not really positives. That liquidity is still locked up. So it's still a pretty tough time in terms of fundraising. But, like I always say, best, the best companies, the best funds will come out of these stronger. So, yeah.
Yeah, it's like the bear is really where you want to build, right?
Yeah.
And that's like where you get to do DD like way better, because then you're like, okay, is this crazy motherfucker crazy enough to like go raise around this crazy idea, and then also build a team that wants to ship on this crazy idea? And it's like that way you can also build this DD. You can do your DD to be like 5 pages long, or just 1 or 2 emojis if it makes complete sense, right? I'm sure there's like emoji like send money, a smiley face, right? Like that's it. Yeah,
ship,
exactly.
Rocket ship. Yeah,
that's exactly right.
Yeah.
So, but it's cool, man. I'm really excited for you. I would love to hear about, you mentioned that the market is like this interesting place right now, right? Like, what is your take on the market right now? Like, what is the hot meta that you think is there?
It's so interesting because, hold on, I've opened some app. It's so interesting because like you're seeing, Bitcoin near all-time highs. You're seeing the actual boring stuff like stable coins and RWAs, boring but useful stuff being hyped up now. And it's kind of nice, right? It's kind of nice where look, we were all, the crypto and AI, the AI agent stuff was fun. Meme coins were fun for a little while until everyone lost everything. But like, it's just kind of this like return to fundamentals. But what we're not seeing is like that. We're seeing like a lot of activity at the top, right? With like Bitcoin, Ethereum, Sol. And we did see with the meme coin stuff, a lot of activity at the bottom. But it's like that middle that's kind of getting left behind, right? Like that. The DeFi OGs, like the makers, right, and the Uniswaps, the Aves, like it's just stuff like, is there going to be another kind of resurgence of that kind of middle? Is kind of the big question, right? Is there going to be an all coin run, right? Like, I hope so. I hope we're seeing this kind of return to fundamentals. But it's funny, like when you see Circle IPOing and popping. That's a stock.
Yeah,
right.
It's not a token, right?
Yeah.
Right? You're not making money off USDC, but like we're hoping that, maybe the other flavors of stable coins, with like governance tokens, like the makers are, could come back, or the new versions of that, like Athena. So that's what I would like to see. I would like to see those protocols and projects kind of in that middle space get more of the love, get more of the recognition, and but of course, like the ones that are building real things and building strong products to kind of pop off. And I think that's when it just fires off.
Yeah, it's really interesting because we, Leshner, who started up Maker, right?
Yep.
He also
Leshner was Compound.
Oh, Compound. Sorry. He also went on to do from Compound to go to do Superstate.
Yep.
Right? We had someone from Superstate come on. I forget his name, but really, really cool dude. And it's really funny. Like, it went from like this DeFi thing to do RWAs, which is a real grown-up product, right? It's like an adulting kind of product. And it's like a lot of these DeFi 1.0s have gone to like grown-up 1.0 kind of industries and products itself, right in time with this institutional inflow of funds coming in, family offices coming in. Like you said, the loosening of like policies from a governmental level. Man, it's like really crazy when you think about this change. And you're right. Like, it seems like there is this weird gap around protocols where they're trying to like revamp themselves into like not becoming Yahoo. You know what I mean? Like, they have to evolve into Google or invest in Google rather than just being Yahoo. And it is kind of crazy that I haven't seen anything like that throughout the bear or even up till now. Kind of wild. Yeah.
Yeah, well, you just wonder, like those all of them have, there's still tons of TVL, right? There, it's still being used. Yeah, it's just a matter of like, it just kind of goes into psychology. Is it like, those are like 18, yeah, like you said, like Yahoo, AT&T, the blue chips now, and there's not that much growth to them, but they're all being used. Yeah, I don't know.
Do you think that, like, as a result of this, like, they're kind of like funds now? They're like basically like funds that are sitting on crazy amounts of capital. Like, we all know there are these L1s or these protocols that are sitting on like $100 million or, like $1 billion. And it's like, now, like, as a result of it, like, there's two paths, right? From a business point of view, it's like, hey, we go out and build a product on our own to evolve, right? Either as a standalone brand, or we revamp the brand, kind of like the whole Maker Sky thing, right? Or we just go through a round of funding and M&A deals itself with other startups. Like, do you think M&A is like one of those things that like kickstarts this next thing where it goes from like all-time highs to be like, bro, like M&A was a thing that would never occur in crypto before, but like, do you think that that's the next thing?
So like protocols merging? Yeah,
protocols
that's
merging, or
happened.
Just buying them. Just be like, yo, I'll just buy you and be like, done.
Yeah, I don't know. That's a pretty interesting, because that like you said, that barely happens, right? That's happened, I think maybe 3 or 4 times, at least some things that we know. And you actually see more spin outs, right? Like, or extensions, right? Like where, yeah, not necessarily spin outs, but like just the people who are, like Stani is like, building Lens now, right? And who is it? Kane is building Infinex now, right? Instead of Synthetic. So like you can kind of see just those founders kind of moving on to different products more. But yeah, I don't know. I think I don't know what it is. Like, I think you see so many of the similar products out there that neither of them are getting like massive traction. Like, it makes sense for them to kind of come together, but I wonder, why doesn't it happen more? Like, maybe there's like complications around whether you're, buying the token or the equity, right? That kind of complicates things. Like maybe they're just, some of them are just sitting on a lot of funds and like they can kind of keep going and keep trying. Yeah, I would like to see that happen a little bit more, because I think there's a lot of repetition, a lot of kind of adding out there. I mean, like, it makes sense because you can just fork this stuff, right? You can just fork the chain or whatever for the protocol. And yeah, maybe it would be a good thing if those communities came together to be stronger under one a little bit more often than it's already happened.
I'm also curious on your take. I'm sorry, I have like 1,000 questions as always. On like, what do you think about? So it's really interesting, right? Like you mentioned in the beginning, like being a Web3 founder is very tough, because like not only is it like you're running a startup, which is just startups are extremely volatile, right? And like there's so many factors that you have to consider in just running a Web2 startup, let alone to a Web3 startup. But then you have to think about community. And if you add a token, that's another layer of complexity onto this, right? Now, what do you think about with the Genius Act passing, right? And stablecoins galore being the primary meta that everyone is a grown-up wanting to talk about. And I asked this question because I talked to someone else earlier today at like a large VC and like a large like project. And, we were discussing about the idea that like, because there's these huge brands now that might have platforms of their own and on-ramps of their own, like what's to stop them from launching their stablecoin, right? So like, what if Sony or Sonium launches their own stablecoin? They say this is the Sony stablecoin. And as a result, like, so you expect that to occur. You think that's a very probable scenario? Okay.
Yeah.
So then what happened to this idea of the homogenous kind of approach for stables, at least with USDC and USDT have been in the market? Because now we'll have like a plethora of stables that'll come in. Like, what do you think that does to that market?
So I think USDC is, in general, is such an interesting use case right now, because I think that it has clearly carved out a very nice position on the highly regulated, highly centralized stablecoin provider. And look, don't get me wrong, it's a huge win that they IPO'd and everything. But like, USDC doesn't represent what we all really, want to see, right?
Yeah.
In this
it's not the cypherpunk thesis by any means.
Right. And that's okay. That's okay. And that's the best thing about this space is that like you don't have to be, there's a spectrum of all this stuff, right? Like you don't have to be fully cypherpunk. You know, on-chain things are usually better than the real world version of it, right? And they're not, so that's one of the things that they're not paying any yield, right? Half of their profit goes to Coinbase, but for the distribution, right? So I'm very surprised that it popped so crazily, like the IPO popped so crazy, because I think it's just the flavor of the institutions. They understand that the centralization, they understand the treasuries and everything that the one-to-one backing. But I think there's going to be, and that's the big thing with the Genius Act, where they did not approve yield-bearing stablecoins, right? I don't know exactly if they like said like it's illegal, because it's still like, they can say it's a security. I didn't dig deep enough, but I know that they did not say those are allowed, right? I know that. But like that's the opportunity, especially specifically against USDT and USDC, is yield-bearing stablecoins, where you can use DeFi primitives to be able to provide yield. And I think that's the big space that's the big space to watch, because Athena's obviously grown very fast with huge amounts of yield.
Oh yes. Yeah.
But maybe other primitives come out, but like that's where I'm watching is the yield-bearing stablecoins, the more decentralized side of things, because I think USDC will still certainly grow. I think the space will grow, but like I think because of that they lack that component, there's a lot of space to grow in the yield-bearing side.
Yeah, because like I was thinking, it was just like, what is to stop Sony and Sonium to just be like, we're going to launch our own exchange. We're going to basically have it kind of like USDC, where with that exchange, we can like cut off all the costs for, doing the transactions of this token.
Mm-hmm. Yep.
And, that's like a big thing that Coinbase has against Kraken, right? Like you have to pay money every single time you do a fee, but on Coinbase, like it's nothing. It's zero, right? So, and then from there, they just say, hey, yeah, we'll generate some yield for you. And it's passive yield that you just get from some kind of drip coming out of there. Now, I know that the Japanese markets are like crazy, like, like about regulation. But like with this whole like wave, I wonder if this happens. And I wonder if it dilutes that whole meta like a great deal, where it's like everyone has a stable coin now. So it's like all it is just like a matter of them believing on the fact of like you're believing on the US Treasury, or you're believing on the fact that someone will give you yield for your stable, right? And it's a de-risk proposition from just having direct, volatile crypto exposure from like, let's say the blue chips, right? Whatever, a user deems that to be, whether it's a protocol token or it's like an L1 underlying token itself.
Yeah.
Should be really interesting to see.
Yeah. I think that's one of the things that I love about stablecoin. One of the first projects that I worked on had a proof of work stablecoin. It actually wasn't that stable. We'll call it a meta stable coin because of, price of energy and all that, the mining power. But like, that's the most decentralized thing you can have, right? I mean, it's basically a stable coin, Bitcoin stable coin, right? So, I think it was a little bit too early in the space for like that to be really adopted. And it still might be, but you can just have this spectrum of centralization to decentralization that kind of like is nice about this, right? Like defines like what this space can be, because anything on chain will be better than anything off chain, in my opinion.
Yeah, that's actually really interesting that you mentioned that, the proof of work one. So we actually recently interviewed a blockchain that does that. So I don't know if you're familiar with Quai Network.
Yes, yeah.
Actually,
Alan, is it Al?
Yeah.
Yeah. I met Alan. Yeah, smart guy.
Yeah, Alan, and then Dr. K from there. So we had them on the show recently, and actually we office with.
Very interesting. Okay.
The Quai token, or you want the Chi, and so just really interesting to kind of see how that plays out. I think it's only been live maybe 3 or 4 weeks. So I haven't looked at pricing on it, but yeah, super interesting.
Yeah. We've talked about that. Yeah, the protocol that I worked at was called Meter, and And it was very like, because I saw Alan sent me information because it sounded very familiar, and I think the technology is super interesting.
Yeah, for sure.
I gotta also ask about like you said, everything runs on a spectrum here, right? And there's so many new metas, and I appreciate you sharing. Like that's clearly for any founders that are listening that are like, hey, I want to build something new. Yield bearing stable coins could be an interesting meta for them to want to pick up, like in this next round, right? But so much, this next phase of like building, but so much of it is like timing the market, right? It's like sometimes you're early, sometimes you're late, right?
Yeah.
How do you, as capital allocator, think about when I'm sure you get like probably like 1,000 pitches a day, let alone, so like 30,000 pitches a month, right? How do you, through your lens, assess like where people are in terms of timing in relation to your investment thesis and your meta? Like, what is your framework for assessing that?
Yeah, so we are very early. We are like pre-seed. Sometimes it's just a twinkle in the founder's eye, just an idea, and it's hard. It's super hard, especially like but I think before this cycle, you can kind of like predict the 4-year cycle based on the halving and all that kind of stuff, right? I think it's very much changed this cycle. And look, I think if you just try to time the market, you're just gonna miss out on something, right? Like you're just gonna lose in some way, right? You're gonna see, if you put too much importance on that, you're gonna find this team that's amazing, but maybe their idea that they're working on isn't perfectly timing the market and lining up to what you predict. Your prediction is wrong, or this team is smart enough to maybe they pivot, and then it's always about the team or at the earliest stages. So I've given up on that. Like I mean, to be honest, I never really tried to just like perfectly time the market, especially because we're so early, that so many things can change before they like launch the token, or like in a bull market or whatever it might be. So I think it's just really we don't think about that too often. I think we when we do our first, like the initial check, cut the first checks in, we really look at the team. We really look at like how far they've gotten on very little, and just like if they've got those characteristics to just like grind it out through thick and thin. Where we have to think about more timing is when those tokens vest for us, and then we got to manage the liquid book. That's obviously something that you got to watch the macro a little bit more. You got to see what the trends are. But when we cut that first check, we don't think about it too much, to be honest.
And to that question, you mentioned like you're making kind of like, so it seems like you guys make founder bets or you make team bets, right? Like what is exactly?
That's the biggest chunk. That's the biggest chunk of it. But yeah, I mean, there's obviously other factors. Everything's important, but yeah, I mean, that's kind of what it comes down to.
So then what do you define as a successful company? I'm curious because it's such an esoteric kind of like question, right? Like for example, like is Synthetics a successful company? Sure, by the metrics of the amount of TVL, yes, there's objective things. But then I wonder about like you said, is there users there? Is there other stuff there? What do you define as a successful company or a successful team?
It's going to be different from any product, because I actually asked this question of like, how do you what are some of the metrics that really define success? And I got this like crazy range of answers, right? Like I was like, is it really TVL? I mean, a lot of times that can be driven by incentives. Is it really like transaction revenue? Not really, because you actually want to lower transactions on an L1 or L2, right? Is it, I don't know. It's hard to say. I mean, I think it's just really a combination of things where you just want, Web3 is so different because things are just not, it's not like SaaS ARR or, like things like that, right? It's not consistent like that. It's very market driven. But like if you have some combination of, strong usage, however you want to define that usage, this like a very passionate community that isn't maybe incentivized in the beginning to kind of get the flywheel going, but kind of over a longer period, they stick around passionately, and that it might be kind of a result of that. Of like if you still can like maintain some mind share over a certain amount of time, and if you just kind of do things the right way, I think like that's a lot of it. Where if you've got a long-term view and like you do right by your community and you kind of have just build for the long term, like that's the kind of team that those are the teams that I like to work with and invest in. And yeah, I mean, it really just depends on, it's a tough question to answer, to have like a very concise answer of, because every product is different. But I think it's a combination of those. And look, you gotta have to look. You notice I didn't say token price, in this first round, right? Now, is token price kind of a result of those things? You should hope so. You hope so. It's not always the case. So that's why you obviously have to address it, but it is, that does not define the success of a company.
Yeah, so because like I asked this also because like I had a discussion with a fellow DAO member, and we cited the example of like some DeFi protocols and then Coinbase, and like one of the things that I found amazing about Coinbase is I saw all the amount of neural capital they were early to aggregate, right? Like Balaji worked there, Olaf worked there, right? Like the founders of Obel worked there. And these people then went on to go start their own funds.
Mafia.
Coinbase
Mafia.
Exactly. And then they went on to go start their own protocols. And I'm like, clearly there's a successful company over here. Clearly there's a successful culture here where they're like, bro, there's something going on there. There's something in that sauce where they're like, people who work here, they are switched on and they go on to do switched on things, and that's like a very unique kind of thing that is like just starting to happen in crypto now, because it's like we're such a young industry, and you can point towards founders and you'd be like, oh, they did this and they failed here, they succeeded at this, and this is where they came from. That graph, that social graph, is just starting to appear, and it's like, it's super exciting to me. I was just curious to see like what your thoughts would be on that. Like, do you put a lot of stake in that social graph where you say you were here and then you did this, and then you did this, and it's like, oh, now I can, even though I don't understand the thesis, you think about there's something happening here, and that, like Jensen Huang has a saying where he's like, always have a good past, right? That's the best thing you'll ever have. And I wonder, do you look at that part of it, is your assessment in that magic equation to be like, allocate, don't allocate? Rocket ship emoji and send money, or like, I have to spend 20 fucking pages on this thing now,
I think that does matter, but I think it has to be relevant to what the person is building. And also, here's another thing, right? Like early Coinbase is like, that experience is going to be different than late Coinbase. And I think you see a little bit with Consensus as well, right? Like you see a little bit of that mafia going on. I think you're right in the sense that like you've got these companies that teach good habits and know how to run businesses or how to build product and how to do specific functions very, very well. So that does matter, but I think it still has to be relevant to what they are building, even though what they're building may change. For instance, if you get someone who consumer marketing at Coinbase, which is great, where they're very good at, but now they're building like an AI for enterprise stuff, like is not quite as a good fit, right? So I'll just kind of wonder where that connection is. And I mean, that's one of the most important things that we look at is like, can that founder prove in whatever level they can, through like a pitch deck and a 30-minute call or a couple of 30-minute calls, that like what they have built, whether it's products or networks in the past, will help them build this company, this product, to be the best product out there, right? Like, so it has to kind of have that what I call founder market fit. But yeah, obviously that definitely, that experience at a well-run firm is certainly going to be a positive. I still think there's got to be that relevance to it, to what they're building.
I guess the flip side to that question is like at Deep in the, over the past few years, and like also this next fund, then if you're, there is the operator metric, right? Like you said, they turn out to be good operators, right? Like, and you have to have that founder market fit as well, right? Like you said, it's very clear. You can't do something that you're not fucking passionate about. If not, you're just like clocking in for the paycheck. Me and Luke were talking about this earlier. It's like, yeah, you're like 4:59, time to clock out, like right. That's the worst kind of vibe, right?
Yeah.
But like, then are you looking at like saying, oh, wow, so now crypto has seen this group of founders between that 18 to 45-year-old gap. Like most of the people are now in their to 45-year-olds. Are you then shifting your focus to like look at people where you're like, dude, we're going to go younger. Let's go undergrad, freshmen, like, and then high school students to like really see the crazy ideas, to get a fresh palette on things, right? Like it is kind of crazy to think a lot of these people, like, I mean, what is the story? Like Olaf from Polychain joined like super young into Coinbase, right? Like, so I wonder if the alpha is also from an allocator perspective, you think about, let's go younger, because there might be fresher ideas here.
I think look, that could be true. When we're at the pre-seed stage, okay, here, I mean, I'll be completely honest with you, right? Like we're at the pre-seed stage. Deep Ventures is relatively young. We're not A16Z, Dragonfly. I mean, those huge guys, like a lot of times they can't even play in the pre-seed stage anymore because their funds are so huge that a $100K check into a pre-seed company is not going to move the needle for them, right? So like we are in the business of like finding diamonds in the rough. And what that might look like is, it could look like, maybe a founder who had some success in Web 2 and they're transitioning to Web 3. And so, kind of relatively unknown, first startup in Web 3, that might be the case. Or someone who's kind of taken a couple of shots in Web 3 that maybe haven't gotten there, maybe got into market and, got some traction, something went wrong, couldn't sustain it. And they're taking a couple of shots but so they understand the industry, but, they didn't make it big. So like, to be well known. It could be in high school, undergrad, whatever, who is, just grinding on the nights and weekends instead of partying. It can come in any form or fashion. I don't know. I mean, I think we certainly have, like, I'm a alumni of like NYU here in New York. They were one of the first. Well, our MBA program was one of the first, I think the first to teach a blockchain course. And then that kind of kickstarted kind of this little, with New York startup scene and crypto scene is very big. And I went to Georgia Tech. So like they've got a great compute comp sci, a lot of entrepreneurs come out of there. So like, we still want to build those relationships because we know that there's going to be a lot of good talent coming there. But it can come in any form or fashion. It's just a matter of like finding those passionate founders who can find some way to like, translate their past experiences, even if they have them, to something that they can build something big in a Web3.
Nice. So I'm curious just a little bit more on the finding process. So I recently did an exercise where I was like identifying all the different ecosystem players in a particular blockchain, and just the process of going through how many of these are actually like legit companies that are still doing things was very overwhelming. And this is just in one chain. How do y'all find the folks that you're looking to invest in, or how do they find you, I guess is maybe the other way of it?
Yeah, so we have we get them all kind of different angles. We just have just being operators and founders in the space for many years. We've built this network of people who would just refer us deals. We've got relationships with other pre-seed venture firms that we shared. Because like a lot of these early stage deals, they're pretty small rounds, but like they don't necessarily want a big VC coming in and taking all the round because of the centralization, right? So there's a lot of kind of like party rounds, a lot of sharing there. We even get some deal flow from our syndicate. We've got like 1,300 LPs in our syndicate that we still are in constant contact with, and sometimes they'll come across deals. And we've got a lot of good relationships, like I mentioned, with the BD teams on L1s and L2s that find a lot of teams that are building on them. So it comes from everywhere. But yeah, we're small. It's like me and my partner, and digging through the deals is kind of going through all the deals that we get is time consuming and is tough, and like we kind of have to be comfortable with like potentially missing out because we're not going through everything with a fine tooth comb. But yeah, the deals come from all tons of different sources.
It's really kind of funny. It's just like, so I have a kiddo, right? So we reread Aladdin a lot. And, the opening scene of Aladdin is like, Jafar is trying to send this guy to get into the actual cave, right? The Cave of Wonders, right? And if those of you who haven't seen Aladdin or read Aladdin, y'all are a bunch of motherfucking troglodytes if you haven't done that. Okay, at least rent the 1993 Robin Williams like cartoon version. Don't watch this Will Smith garbage that came out. Okay, but like that said, like it's kind of like you mentioned the diamond in the rough, right? And it's really interesting. The saying, like when the tiger gives the caution to anyone who steps in there to find the lamp, right? You have to find the person whose worth is far within, right? When you think about that, I wonder, not only from a founder perspective, do you look at sectors in the industry when you're like, hey, this sector in the industry is like, we haven't really cracked it here, but this is the golden opportunity in it. Like one of the big ones was consumer. And everyone thought there was different pathways to consumer, right? Like gaming was one of the things that we thought, right? Meme coins theoretically is one of those things that we thought. I'm wondering, do you think that there is a sector in crypto now as part of your thesis, or that you just have an inkling for? It could be a gut feeling that you say, this sector is the one that's, the worth is far within, but it's worth exploring.
Yeah, so we've got 3 sub theses, and obviously one of them is how we met, right? Is like the Bitcoin, even though you're building on Doge, but yeah, is the Bitcoin ecosystem, right? And you could lump that Doge in there as well. You going through Bitcoin Startup Lab, like that is we've invested in 3 companies in the Bitcoin ecosystem, and I think it's just such a interesting story of how it's the OG crypto, and the store of value asset that everyone loves, and now people are building stuff. And what's crazy is that like all these teams are building, and I talked to all these teams, and like they're finding so many problems, like such a deficiency of like developer tools, that they have to build essentially everything from scratch, and everyone's kind of building that underlying infrastructure as they build their original product that they wanted to build, right? And I'm sure you're going through something similar, so like everything's kind of converging, and like I don't even know who's building what products anymore, to be honest. But it's going to be great because there's gonna be some kind of like the standards are forming as we speak, and there'll be a handful of standards. I'm sure there's not going to just be one, but like that's just amazing to see. Like it's so early in that space, really there's the OG kind of L2s, like Stacks, Rootstock, and if you want to call Lightning, like now there's, I don't know, 150 L2s, and just to see that evolution is pretty amazing. And it's still like there's so much at stake because you've got this this $1 trillion asset that we want to get to be productive, right? So that's a massive opportunity. So that's one that we have our close eyes on. Crypto and AI is another one. My partner Sherman, he actually launched one of the first decentralized compute protocols back in 2017, called Raven Protocol. It I think we went through a ridiculous hype cycle with the agents and all that, but I think now we're seeing that die down a lot. But just like anything else, like now we're seeing this like real building of these agents, as well as decentralizing the AI stack. So that's very interesting. And like BitTensor is like super interesting. I've been digging deep into BitTensor. And the third one is kind of a little more generalist, but like we call it purpose-built protocols. I think look, I'm not saying that like we can't still innovate on L1s and L2s. I still think that we're early enough that like there's still things to optimize there. But I think there's an opportunity to kind of build products for like specific use cases that are more focused on solving a specific problem for a specific target audience. So I think those are our three kind of sub theses that we follow, and and we like them. I think there's tons of upside. There's tons of amazing things being built, and that's what we got.
Well, like I know we're pushing up on time here, but like I gotta ask, like, I mean, how does a founder get a hold of you? Right? If any founder that is like, yo, I think we fit into that sub thesis, and it's like, yo, like my Riz matches your Riz, and they want to reach out to you. How do they go about reaching out to you and Sherman at Deep? Because he seems like a very good counterpart to you also, and like the way you guys are structuring things and thinking about things. How do they reach out to you guys?
Yeah, I mean, for the most part, we've got a form on our website that where you can submit your startup. You can hit me at Mike W Chan on Telegram. Like I'll be honest that we're kind of slow right now. We've got a lot of things to look at, and we're kind of in heavy fundraising mode. So I apologize in advance. But yeah, I mean, but we always try to get back to the founders. As quickly as possible, whether it's let's jump on a call, or if it's not, this isn't a good fit. But yeah, and we're not one of those VCs that are like you have to come in on a warm intro. I mean, that obviously helps, right? Like if there's someone that we trust that says, oh, this is a good friend, or but like we eventually look at everything and give feedback.
That's awesome. Yeah, dude, like this has been amazing.
It's been fun, man.
Yeah, I can't wait for you to come back again and then shill us some of the craziest things that you've heard. Like you're like, we allocated to this team, we're super excited, and this is all the reasons why it went from a 5-page memo to like literally rocket emoji. We're deploying funds. I can't wait to hear that when you're ready.
I actually enjoy like writing the nice reports and all that kind of stuff. But it was wild. I was like looking back at some of the things. I was like, this was like 2 paragraphs, and send money here. I was like okay, that's sign of the times. And not disparaging anyone or anything. I thought it was fun. I thought it was entertaining.
No, this has been great, man, and it's I really appreciate you sharing your insight and your theses and your takes in the space, right? Because like so many people on the founder side like don't get an understanding, or they're working someplace and they're about to go into founder mode. They don't get an understanding of like what is that other side of the table? How do they think? Yeah. Why do they think this way? What do they see that we don't see? So
yeah, and I'll just add, like, just for as somebody that's hasn't founded a company yet, just getting insight into how all of this works is super valuable. Just not a lot of people know that before they're actually in it. So I think that this has been great for me personally, and hopefully for many of our listeners.
Yeah.
I appreciate it. I mean, there's a lot more that like, we could talk about, and just in terms of like, but overall it kind of comes down to just like, it's very similar to marketing. And like, when you think about your customers, or, that you're selling to, or users of your product, it's kind of like you got to understand where they're coming from, what situation they're in, and providing like kind of like the value proposition to them, it's pretty similar in the other way. It's like, okay, what's the value proposition? What's the, like, you're not, if you're building a product, you're not going after like every single person in the world, at least not, initially. Same thing for VCs, right? You're not going to pitch every VC. That would just be a waste of your time. You kind of have to understand what the alignment is, target audience, all that kind of stuff, right? So, like that fundamentals of like sales and marketing, it works, across all there. And that's a similar, similar process you got to run with whether you're selling to customers or you're selling to VCs.
Awesome.
Dude, thank you.
Dude, this has been all fun, man.
Yeah.
This has been awesome.
Thanks for having me.
Next time you got to do it IRL. You got to come down to Austin.
Yeah.
But the friends of the friends of the pod, we can do a bunch of ranch waters and tequila shots and really start digging into it. You got to bring some of those investment memos. Yes, exactly. And then we'll be like 512, and then basically it's emoji and rocket ship, right? Like, this is what it is. But this has been fun, man. Thank you so very much.
Thanks for having me, guys.
Thanks, Mike.
Yeah.
See you.
Thanks for tuning in to this episode of the ATX DAO Podcast. If you like what you heard, please rate, subscribe, and share the podcast with your friends and colleagues. To learn more about ATX DAO, visit us at atxdao.com and follow us on X, Farcaster, and LinkedIn at ATX DAO. Thanks again for listening, and we'll catch you in the next episode.